I was doing another startup. We won't bother going into that, but one of the lead developers said that Bitcoin broke $1,000, um, and I was like, "What's Bitcoin?" And he explained it, and I was like, "Okay, that's like digital gold." And this is post. I mean, this was tail end of 2013, on the end of that bubble, and if I recall, yeah, so there was it was just exploded in this bubble, but like it's post 2008, right? In 2008, we had the world financial crisis, and before that, I had exited my startups, and I had a little bit of money, and I was starting to learn how to invest that and trade that, and one of the things that we did, like some of us that we did, my friends that were kind of mentoring me how to work with financial markets, were saying, gold is the thing because this whole thing's going to collapse, which it did. The financial markets did collapse. And so I knew a little bit about gold. And then I realized that now you could replicate this thing on the internet natively. And I was like, well, shit, this thing just got invented a few years ago, and it's early, and you can look at it and it's just bleeding edge. You can cut yourself on it. It's hard to use. And I figured, MP3s was like that, 12 years ago, and now the iPod's out. And I give this 12 years to get to mainstream. And I was like, I just ran the ratio of what Bitcoin was valued at versus gold. And I was like, if we give this 12 years to get to gold, that's $450,000 Bitcoin. And right now the price has just crashed from $1,000 to $600. And I was like, okay, I'm going to start buying this, and I'll buy one Bitcoin just for fun in case it goes to 450. I won't be pissed. And then, I later on traveled to Bali, and there was a really good Bitcoin meetup there, and met some really interesting people. And they started telling me the lowdown on Bitcoin and how it really works and all the details around it. And I was like, no, this is really interesting. So as the price was sliding down in 2014 and the longest bear market we had, I was just continually buying as it came down.
What was it about what they said in Bali and in the community there that really convinced you and had you going further down the rabbit hole and gaining more conviction?
Really, I think, gee, it's like, it's all sort of merged in one now. So what did I learn? I learned that, I got a higher resolution to, I just had this amorphous thinking that it was digital gold on the internet. I didn't figure out what exactly that meant and how it worked. And so it took me some time to actually, it was like maybe 4 or 5 months after investing. So this is like opposite to most people. I invested first, and then I did deeper research.
Me too.
And read. Really, this is
Yeah.
like, yeah, I just put some money in, and
Yeah, me too.
not much. But then when I did more and more research, I read the white paper, understood proof of work by then. Um, like just got more into it. I started to feel the community around it, and then it takes you down that rabbit hole of hard money, and then you frame this thing. Like, I think one of the key unlocks is reframing. Bitcoin is this currency that's a new kind of thing on the internet, and reframing that slightly differently is, we've figured out for the very first time how to put money natively and programmatically as part of the substrate of the internet. Mm-hmm. And because by then you can see that, software's eating the world, everything's going digital, and basically every part of society is being eaten by the internet. And it was like, actually, you've got this money that is actually now woven into the fabric of the internet. And that seemed like a really powerful idea. And just the way it worked, you couldn't bring it down. You know, you can, like the internet, you can nuke the entire world and it would still run. And Bitcoin's the same thing. You could nuke it as hard as you can, but it'll keep running. So like, it just like, it's powerful in what it can produce, how big it can get, which is the entire world economy. You can't take this thing down. Yeah, it was an interesting viewpoint, right? And so like I was a believer that, you know, I'm not bearish to the internet. I don't think that we're going to give up the internet and go back to faxes and telephone lines. So why would I think that would like this thing would be a flash in the pan and you know, paper printed money by some central government would be what my grandchildren will be using, you know, while we're in this far off future, you know. So it's really hard to think. It's really hard to think that paper money would be the thing that would win this if you're a technologist and understand where things are going. And so, you know, it's just like lots of stuff, like listening to Andreas Antonopoulos. He was a great explainer of how this thing worked, and so, you know, a lot of information being shared.
So how did you start to get into on-chain metrics and data? What led you to creating Wooble, you know, this data resource for people that has indicators that you created yourself, right? In-house indicators. What does that even mean?
Yeah, I think this is because, you know, super introvert. I'm like, like I did something that was not my norm, which was like, the leader of the Bitcoin meetup in Bali, Gary's his name. Gary said, I need some help running this. And, you know, he ran this meetup every week. And it was really popular. But it was really done well. It was like a show, right? It was eventually it was videoed and it was like a regular thing on YouTube. And so it's quite engaging. And he said, I need some people to give me a hand. And so does anyone want to share the load and take a slot in the meetup? And you know, I was pretty passionate about this by then, and I said, yeah, I'll do a 10-minute slot, and put my hand up, and I figured I'd do this thing called the number of the week, which basically would grab a number from anything in the industry of Bitcoin and you know, do a dive into it. And at the time, we had this site called blockchain.io, and they put all these charts of the network up. And I'd find myself often going to this site, looking at different charts to try and find some content for the next meetup. And you know, you stare at charts long enough, you start to go, well, this is really interesting. And I remember like the amount of volume going through the network seemed to track the market cap of the network, and I didn't know why, but you know, I ran a ratio between the two, and it created this sort of pattern. And someone asked on Twitter at the time, what is the closest thing to a price earnings ratio for Bitcoin? It's not a company, it has no earnings. It doesn't have a share price. It has a token price, but there's no earnings. And I thought about it and I was like, I think it's this ratio. And I said, that's this. And I didn't call it, you know, it was eventually called MDT ratio, but like, and the concept was the amount of activity in this network, which is, it's an investment network. So whenever people invest, you see volume moving between investors. And so you run the ratio of activity in the network to how it's valued. And I know that they track each other. And so that was my first thing. And then one thing led to the next and the next. So that's how it started. I think it was quite organic, just out of curiosity. And then I remember, I think one of the key moments was in Cayman Islands. No, not Cayman, Canary Islands. And I was spending a month there, and like it was kind of my bachelor time. My girlfriend at the time had moved to the US to be with her folks for a month, and I had this 1 month to myself where I just surfed and could geek out on the computer. And I actually had reserved that year just to do work on creative projects. And I was just looking at going, wow, there's this whole crypto space. I've got Bitcoins. I bought the Ethereum ICO and I saw how coins can go up, and people were all actively trading these altcoins. And I was like, I want to run, simulations of things like if I bought a basket of low cap coins, would it outperform Bitcoin? Because in the stock markets, under portfolio theory, which I read about, if you buy like low cap stocks, high risk, also higher return, but if you buy a basket of them, you can lower your risk and still get the same return. So that's actually a better portfolio. And I wanted to figure out if it was true for crypto. So I spent 1 month writing a whole bunch of code, getting all the data and running these simulations. And it was surprising that that didn't actually play out. Like Bitcoin outperformed most of them, the baskets. So I tweeted that, and I think I had 200 followers at the time, and that just took off. And I remember like Barry Silbert, who was like kind of, I don't know, he, at the time was a bit of like the godfather of crypto. He owned all the companies. I remember him asking me questions about it. CoinDesk said, "Can we republish this article blog post you did?" So it just really took off, and my Twitter started exploding. CoinDesk kept publishing the stuff that I was doing, and then they asked me to write for them, and then Forbes asked me, like Laura Shin approached me to write for Forbes, and so eventually it was like I was this writer, content creator, researcher, and that's really how it started. I was just doing this thing out of curiosity, but I guess people liked the content, and it started to take off.